Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Monday. It's the 10th of August, 2026. I'm back from a week-long hiatus. Markets certainly haven't taken a pause, and in today's video, I'll break down everything that you need to know ahead of today's U.S. session. Let's get into it. Broadly speaking, markets are consolidating. They continue to digest the disappointing non-farm payrolls report that we saw on Friday that is keeping expectations for the Fed relatively low, with less than 50% odds seen that the Federal Reserve will raise interest rates at its next meeting. Meanwhile, little in the way of developments between the U.S. and Iran, with President Trump saying they're taking a low-key approach while Iran negotiates with Oman on a potential path through the Strait of Hormuz. Nonetheless, even if that agreement is reached, it looks like the U.S. would have to sign off on it. So we're in that same holding pattern that we've been in really for months now. And you can see here major markets are mostly taking that data in stride. Oil is edging higher after falling sharply last week. U.S. indices and gold are flat, and the U.S. dollar is edging higher in quiet trade. Looking ahead to the rest of this week, there's essentially no data during today's U.S. session that's likely to be market moving, so we'll continue to watch for any headlines about Iran or anything else that crops up. But in terms of economic data to focus on this week, there will be a number of reports starting primarily in the back half of the week. My big focus will be on U.S. CPI, with the Federal Reserve emphasizing inflationary pressures. I think that could be even more impactful for markets than the non-farm payrolls report was, especially with a lot of uncertainty about what the Fed's going to do. We could see a lot of volatility on that report. That's followed on Thursday by initial jobless claims and the PPI, or Producer Price Index report, which should provide some more color on the inflation picture. And then on Friday, we'll get the U.S. retail sales. So a lot of data, most of it in the back half of the week, that should clarify some things for traders about the world's largest economy. Today's chart of the day is gold, which you can see had been within a falling wedge pattern since setting record highs earlier this year. We have now broken out of that falling wedge pattern, and you can see the breakout was a relatively large candle, indicating a lot of interest in the market, and to me, increasing the likelihood that this is a legitimate breakout that was accompanied by a breakout in the 14-day RSI indicator above about the 50-55 level that had been capping that indicator for basically the last 6 months. Moving forward here, we're above the now upward trending 50-day exponential moving average. I think traders next will turn their attention to the 200-day moving average as a logical first objective. That's in the 4,500 area. Above there, we have some previous highs at 4,800. And if this bullish momentum holds, maybe as we move into the fall, that 5,000 level, a critical psychological barrier, could come back into play. So lots to watch here for gold. After a very quiet, consolidative period, we might be seeing volatility return to the yellow metal. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I can ask just one favor before you go, please do drop a like on this video. It's a great free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks again, and best of luck with your trading today.